The following is a presentation of TFNN. The Global Market Pulse with your host, John Logan. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, John Logan.
Hi, guys. Welcome back to the show. Hope you guys are having a good Wednesday morning there in the States. It's Wednesday night here in Asia. Just wanted to actually talk a little bit about Greece to start out with. Looks like they're in the final stages of possibly getting something done, but heard some, numbers today. Just really unbelievable that those different countries, different factions, different cultures, if you will, really can think that, with the different differences of, for instance, I was, watching Bloomberg really, I guess, early you guys this morning, and the facts are, 60%. If certain things like 60% of the GDP of Greece go to pension plans, and the average in Europe is 13%, and they don't want to make any concessions on that, what in the world would the European Union even want those folks in there? Those are big time differences. The average retirement age of Greece is 10 years lower than the average retirement in Lithuania. What what more disconnects could you have, and why would anybody want those guys? Yeah, exactly. It's a free lunch forever. That's what Jay's saying in the room. It's just that mentality, and the White House is on the cliff, and that's not reality. That's called a disconnect in reality, in my opinion. Just like here, we've got, I'm in the States, and I read the news. I actually hate to read the news there sometimes, especially on some of the societal things going on that are kind of sea-changing events right now. The education system there, for one, with the dropout rate. In a lot of the inner cities, the dropout rate is much greater than 50%. Here, for instance, there's a massive premium on education. People pay to go to school. People, it's a big desire, status symbol if you can go to school. And those are, just two different things from two different countries on polar opposites of the earth that just is very disheartening to go home and see how people don't appreciate education anymore, seemingly, a lot of folks in the U.S., and they feel like it's something, they take it for granted. Over here, they don't take it for granted. But that disconnect within the European Union and that financial balance, that's just not there. I don't understand really how there's any negotiations even going on. It's like my way or the highway, or get out, and we'll take the hit. Sometimes you gotta call a bad debt, but we'll see what happens there. That being said, let's get right into the euro. And this is one of those situations. We talked about this 1225 fence here, unfair highs on the daily. We've been focused also on that weekly, up around 114.67. Never quite got there 5 days ago now, I guess. We got up into 114.36, excuse me. But this is kind of one of those situations where, we had the big move down. We talked about not buying this, talked about shorting again below 1225. Now we've gone back and retested this. If you watch this show and you look at what's going on with this navigator down here, kind of lower highs, higher highs here to some degree, this is one of the real cool scenarios that I like to see close below inflection points, usually below the profile altogether, go back and retest that inflection point. And I'm feeling relatively rosy about the short side of this, and possible targets again on the euro down at 108.70, and even lower on the weekly unfair lows, ultimately 106.15. I think the Greece thing is going to get put to bed one way or the other here soon. If you want to wait it out and kind of wait in the next 24, 48 hours to see what happens, that's up to you. But stops can be, this is a 24-hour market. The good news is it's not like a U.S. equity where you wake up this morning, you're short Netflix and it's in your face quite a bit and you can't do anything about it. And your stops are, miles before the opening price, and you just got to take the heat there. Currency's obviously a different situation. Stops can get hit real time. Slippage is there, but I really like this situation. Again, it might be time to get back in the water on the short side on the euro, and I like the way this is looking at this stage. All right, that's the situation on the euro. Let's take a look at the Japanese yen. We're just going to run through some of the, my favorite trades. Still loving this from the long side. Again, targets above 124.61 and even higher. We had a really, really serious run, 18-year highs in the Nikkei. And let me pull up the Nikkei here. So here's the September contract. So this is the inflection points we got to pay attention to. 27.25. So in my mind, yen's going to get devalued even more, which means the yen's going to climb higher. And the Nikkei, which is kind of outpacing the yen right now, you've got some support areas right now around 27.25. If you're trading Nikkei futures right now, that's kind of what you're looking at. We always talk about this too, looking at the Nikkei 240-minute chart, a little bit of a kind of TAS profile technical analysis moment here. We talk about the 240s regulating the trade up, but we always talk about, and we've kind of started to break down a new 240 box up here, a new 240 balanced area, starting to get down below. But remember, we always talk about, what takes precedence here. The weeklies, which the unfair highs are at 27.25. Okay, and I'm going to pull this up in the scanner. Hopefully, I'm just not going to talk about it too much anymore, but hopefully this thing will be available to you before the end of the week. This is sound like a broken record here, but let's take a look at where are we at here. Well, I know it's on here. Am I missing something here? There we go. God, I knew the Nikkei futures are on here. So as we look at this, we see the top of the box, 27.25 on the mouse over. I'm going to pull up our landscape chart here. 27.25, and on the daily, 27.25. So we came back today, and we're talking about the 240. Mosquitoes all over the place here. We talk about the 240 regulating the trade up, but remember, weekly takes precedence over daily, over 240 down the line. And when you get into these inflection points, I'm going to show you on the chart again here, and you come down into these areas of support, we reached a low today of 27.40. So 15 ticks from that, bounced a little bit here decently. This is what we're going to use: weekly unfair highs, daily unfair highs, stops down below. And we're still going to look at this as a long opportunity. Breakout, go back and retest. Just like the euro is kind of doing that similar action, conversely speaking here. These are nice little setups, and in my opinion, can't be ignored. So we're going to move on a little bit here. We're going to take a look at gold. This is something we took off yesterday. On the short side, I think we were looking at 1177 is where we took it off. It's on our website there. I think this thing can head a lot lower, actually. We've got targets 1170. You're going to have to wait patiently now until that gets eclipsed and closed below. But again, 1150, I think, are the near-term targets on gold ultimately. I'm going to stick by that for a while. We're going to take a look at crude oil really quick. This is the August contract. And again, I'm not a big fan of buying breakouts on crude oil right now. The U.S. dollar obviously has an impact on all commodities, but again, I'm a little more range biased on crude oil right now, and I'm not a big fan of buying the breakouts above 60.88 on the August contract on crude. So this is kind of a pass on this opportunity on a breakout above these profiles, and I'm not a big fan of buying it. We're going to take a look at silver really quick. 1583 current price. on the July contract. That's what I'm still showing as the active contract. Similar to gold, just looking extremely bearish on the daily, but getting down into some weekly unfair lows here. This is something that's kind of crowding, similar to gold. I think we could bust through this and head lower, and we're going to have to use the 240s on that type of attitude to kind of regulate the trade down and try to look at that, getting some hints, some new bars or new profiles attempting to appear on our daily, or new 240s that are possibly going to appear. And you can actually catch all of that action right here in the scanner on our futures section, which I have up right now. So again, let's just see gold. Where are we at? All mixed up here. Gold. And somebody changed my. Here we go. There's silver. There we go. So those are the inflection points we just spoke of. 15,621 on silver. Actually, 15,621 on silver and 15,877 bottom of the box on the daily. So a little bit more bearish on silver, and that's where we're looking at silver. So let's go back up into the U.S. dollar really quick. Let's just cover all the bases on the main topics that are driving the markets before we get into any stock plays. We're going to look at Netflix, obviously some news on that. A little bit of news on Walmart, Facebook making new highs. We're going to take a look at the technical scene on that. BlackBerry's coming out with earnings this afternoon. Don't know if that's worth doing too much with, but here we go on the U.S. dollar. So we talked about targets above 95.75. Those were met yesterday. We're backing off. See how that works. New box attempting to appear, sign here. And then we get the profile. Then we get the run up, and we met the targets. I mean, overshot just a little bit in a volatile market. Reached high 95.88. 95.75 was that target. Now we're coming off. So what do you do with this now? Again, I'm a big fan of being long the dollar, and having some daily closes above these inflection points, 95.30. I think you can look at that, even though we're trading 95.33 right now. I'm going to look at that as support for the dollar to actually move higher and hopefully blow back up into the 96 and even higher range for the U.S. dollar. So that's my take on the dollar. We're going to pull up the S&Ps. We're going to get right into this right after the break. We got about 10 seconds here before the break. Here's the latest 240s. We talked about getting below 2104, 2103 yesterday, just kind of waiting patiently. Looking a little heavy, but nothing major. The inflection points on the short term right now, 2109 and 2118. But we're going to talk about the breadth relative to this when we come back and pull treasuries into that conversation. Then we're going to get into some stock plays a little bit later, guys.
Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. John takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi guys, welcome back to the show. We were going to get into the S&Ps and Treasuries a little bit here. Yesterday we talked about the breadth starting to, show a little bit of cohesiveness towards the move up. Long-term breadth, again, we look at these weekly stances very, very seriously. And as we look at the weekly, we've had this crossover October 24th. Last time we crossed over on breadth negative, and then we had a crossover June 5th, and that's pretty serious when that happens. And I'm not going to take that too lightly. I haven't been a big fan of taking longs. I've just been basically preaching lately after we had these breakouts, again, above some daily profiles that and rattling around. Just not interested in taking longs up here. And you might say, well, damn, Logan, you've not taken longs on the S&Ps since, maybe back in February. We were kind of still looking okay there. And then we had the breakdowns, and that was coincidental with some other breadth situations that we had. But we were able to buy dips on that long-term weekly breadth staying positive. Previously, pretty much every time. Now, when we started having these pullbacks into here back in May, wasn't a big fan. These are our daily top of the box situations here, and this is a different contract, obviously, the September contract. We just haven't been a big fan of taking the long trade, and we've had some reasons to take the short trade, and we've talked about those, and we've gotten stopped out of trades, and we've, that's a part of the game. But as we look at these, we passed on buying the dip recently because of this negative breadth on the long term that we've had. That's trading. You missed some trades. You found another inflection point up here, 2102, 2103, 2104. That didn't seemingly work out. We had to get stopped out of that. It was a little bit of a volatile situation with all the Greek stuff going on. But I'm still not a big fan of trying to buy support on this particular product. I'm going to stick with Steve Rhodes coining it perfectly, and I think it's just spot on that we are going into a stock pickers marketplace like never before. And the good news is you don't have to always trade the S&P 500 futures, because that's not indicative of stocks that are kind of going all over the place trying to gauge what the index is doing. The cool thing is when you got a kind of a calculator, if you will, like this, and you're able to kind of drill down into these indices and look at different time frames and see what the internals in a collective stance are doing. Now you've seen the world before was kind of rolling negative, and now it's as we started breaching some of these levels, we're getting some cohesiveness here. But the S&Ps are not the leader of the pack on any time frame, to be honest with you. So that to me lends credence to where is the high probability trade. On the long side, to me, it's not the S&Ps, and you've got to look deeper into the scanner, in my opinion, to try to find things that are showing their hand early. And we're going to go into, the S&Ps here. Case in point, do a couple of filters like we always do, and it'll find the candidates that are acting in the manner that you want to see them acting relative to, where the stance of the S&P actually is, and how to separate. It's almost like you're, kind of doing egg whites and egg yolks and trying to, distill these things out so you can actually deal with them a little bit better. And that is what I think Steve Rhodes is really, hitting on the head is, you've got to find the opportunities. And the opportunities aren't necessarily always trading S&P 500 futures. So as we look at this situation, how I did that. Well, my scanner just did that. As we look at these situations with the S&Ps, I'm just not a big fan of going long the index. That's in a long-winded manner. I hope I finally beat the dead horse. So where do we start thinking about getting short this again? We want to look at the breadth. Hopefully that weekly breadth will roll over again before Friday, and hopefully we can get down below 2103. And then I'm going to feel hunky-dory again about going short the S&Ps, but right now it's kind of a no trade. It's no leverage on the upside or the downside. That being said, let's look at the September contract on the notes here. So we talked about trying to buy the dip at 125.24 yesterday, in fact, and talked about how that didn't work out. Now we're just kind of rattling around here in the fair auction. I don't know if the notes are going to make any drastic moves one way or the other right now. It's kind of like the S&Ps. We're just a little indecisive. I'd like to see the S&Ps get below 2103. Then I'm going to feel good about looking at the treasuries long again if they can get coincidentally above 125.24. We're going to be right back, folks.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
If you're like me, you're always looking for ways to diversify your financial portfolio. Everbank's innovative Market Safe CD can help you diversify while protecting your principal deposit. In fact, Everbank unveiled a new 5-year market-safe power metal CD, which combines the power of gold, silver, and copper. Metal prices are currently low, so this CD could really deliver. Consider the facts. You get exposure to 3 valuable metals in one index CD and have the potential to earn up to 45% capped upside payment at maturity if the metals increase in value across annual pricing dates. And should they decrease? No worries. There's zero risk to your principal here, as you still get 100% of it back. Keep in mind, returns are based on CD performance. No annual percentage yield or periodic rate of interest is paid on the CD. Intrigued yet? The July 9th funding deadline is quickly approaching, so hurry over to everbank.com/TFNN-CD for more information, including important product details and disclosures. Once again, that's everbank.com/TFNN-CD. Everbank is a member FDIC.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, guys. Welcome back to the show. I think we've got a caller on with us right now. John from Philadelphia.
Good morning,
Hey.
John Logan. This is John in Philly calling. How are you?
Good. Good to hear your voice. The voice of reason.
Yeah, well, we all can wish. Say, John, I wanted to ask you if you could bring up some of the grain futures, specifically starting off with wheat. And then perhaps following up by look at soybeans. And, we're right in the middle of growing season now, of course.
Mm-hmm.
And the futures market with the new crop contracts are doing the job of attempting to give best guesses as to eventual crop sizes. And, of course, that's going to change as weather changes.
Mm-hmm.
And here in the U.S., I just might mention as a backgrounder, John, U.S. growing season weather is not average. I would say I would categorize it as a little bit more hostile than average, and specifically, it's too wet and too cool, generally speaking. So I'm long wheat, and I'm wondering if you can shed some light as to where you think the trading parameters for that contract might be.
Okay. Yeah, let's talk about July wheat or December wheat, or what do you? Which one do you want to
July
get?
wheat would be good for now.
Okay, great. Yeah, as you said, I mean, you hit it. I mean, you sent me a couple of private messages the other day before we did a little moonshot there, and very good. I was commenting. I'm not a big fan of going long the grains right now, but it's a great call. I think I said something. I wasn't really even a big fan of even thinking about this until maybe we got above 505. So you probably caught it 20 cents earlier than I did, and I didn't even go long. So I mean, that was a great call. So where do I think this thing's headed? Like you said, it's kind of a crapshoot trying to guess the weather. I mean, Farmer's Almanac, whatever you want to look at. There's things that there's hurdles that you have to get through in certain parts of the season, as you know, and that means did it. And what's going on in certain parts of the country really pale in comparison always to what's going on in the Midwest when it comes to growing corn and wheat in the upper Midwest, mainly for wheat. So, where do I think it's going? The big time breakout situation on July wheat would be above 537.5 a bushel. 505.5 may be support for a while. What would really be cool. I'm not seeing a lot of direction here, any biased opinions on any other indicators that I look at. I'm just looking at profiles right now. So, we could have a little bit of a support at 505.5 on July wheat, and that would be kind of cool if we came back and retested where we kind of got into the bottom of this balanced area. But 537 and a quarter, 537.5. That kind of is sitting also on recent highs on July wheat. As you know, I think the recent high on July wheat 2 or 3 weeks ago was 537.5. So the problem with that is leveraging off of that unfair high. You're usually going to hit some stops. I mean, wheat, as you know, can get pretty volatile. We could run up to 560 easily, but I'm not a big fan of taking a big long-term stance on wheat right now. I think it's going to be relatively range-bound at best. There's a lot of wheat that has been planted, is in the silos, and is going to be planted, and it is out there trying to grow and get through the weather scares like you're talking about. I mean, back in my state, I think my sisters are saying it's been like over 100 degrees for 2 or 3 weeks in a row there.
Hey, John, thank you so much for posting the daily WN5 chart with your profiles. Can I ask you specifically?
Sure.
I notice I'm looking in Tiger TV, which, by the way, is a great tool. I'm looking yesterday on the rally bar. I see that is color coded in yellow. What does that mean, please?
Okay, for us, that can mean, it means a couple of things. It usually can mean that there's been a break in stride in what we call Vega, and that means that we've gone from that red tranche of bars into the balanced area, and that's just an indication. If you're trading our we have a whole series on this, John. I don't talk about this too much because we don't offer the indicators through TFNN, but the scanner actually is kind of the crux of what I use. I show the charts because I think people like to see the charts, but if you go into the scanner, I'm going to answer your question. I know I get off on tangents, but if you go into the scanner, which we do sell this on TFNN, and you go into where's wheat? Somewhere. There it is. You'll see wheat's inside the balanced area, the gray area, if you will, on the both of these weekly and daily sales. And there's that 505 3/4, bottom of the box, top of the box 537.5. So what happened yesterday is it showed kind of a yellow peel back little sign there, which means that we have a breach in a profile, and that's what that orange. It can mean a breakout up top, or it can mean a breach, and it's just giving you an indication that there's a change in profile technology, if you will, I guess.
Thank you for that answer. Could I also follow up and just ask? I find it fascinating that the last swing high at 537 also coincides with your top of the box at 537. If wheat for whatever reason rallies over that, saying closes, a daily close, maybe 2 consecutive over that mark. Given your experience with trading markets and seeing how price responds to profiles, would you have any suspicion that any breakout would likely hold that top of the box 537, or is that not something that you'd expect necessarily?
Yeah, I mean, it definitely would astonish some people. I think there's a lot of people who've been bearish on the grains. I, for one, have been one. And a lot of times, people keep adding to, price action that keeps going higher. It's like they're dollar cost averaging into something that they, are stubborn with, I guess. And a lot of times when we have that breakage, and we had it happen before on the last profile. I mean, we had it, we kind of rattled around there, 1 close above, 2 closes above, and then it broke everybody's hearts on the long side. That could happen again, and that's what stops are for. But I would, the good news is I would definitely not. It doesn't allow me to think on the short level if we're closing above 537. It kind of blocks out the short side, and I'm saying I could take a shot on the long side. I like that close outside the box or close below the box or above the box and go back and retest. Those are the automated systems that we have that really do well. Is they literally just wait, just like we looked at the euro early, that same situation. I don't know if you're watching. And, I think we looked at another product that was doing the close outside and go back and retest. That would be, I would be interested in taking a shot at wheat on the long side if I was going to do it. It's just, maybe we kind of ran up when we went back and retested that 537.5 level. That would,
Gotcha.
Again, it could catch some people by surprise. And that would be a very compressed time frame of, where, as a trader, I know you know what I'm talking about. Sometimes you just fall in love with shorting things because they usually fall faster than they rise, especially in the stock market. And you kind of compress your time frames on how fast you can make money. That could be a very similar situation on the reciprocal side, being long wheat, because it would catch people asleep, I think, and then they'd have to cover, and then it might get a little out of hand. So that would be the interesting thing.
John, thanks so much for that. Just to wrap up on this, let me share with you. I had purchased late last week July wheat 492, so it's up 518. I've got an edge. I can sit with it now. I will share with you, in the Tiger's Den, I posted the long-term monthly chart on wheat contract. If you and your listeners take a look at that, you will see wheat's been in a major bear market, and we can make the case on the monthly chart that we're in a bottoming phase. It doesn't say anything about what's going to happen tomorrow, of course, but let me just give you an alert. Weather-wise, the Chicago wheat contract, grown Missouri, Illinois, Indiana, Kentucky, that sort of thing, it's just too damn wet. So there's a problem there. Number two, wheat grown up in the Canadian prairies, it's too damn dry. And in Russia, and East Russia, Kazakhstan, the conditions are worse than average. Now, is it going to get real hostile? Of course, I don't know. But what I will tell you is it's illustrative and educational to take a look at what happened in wheat from June and July, August 2010. And the monthly chart that I put in the Tiger's Den shows it. And there was just an explosive rally starting July 1st, 2010. And that was due to a crop failure in Russia that particular year. And of course, I have no idea if we're going to have crop failures, but there are some problem areas. So I just give you a heads up.
Yeah, well, I think I love what you're saying, and I love how you're playing it, because, option volatility has probably dried up a little bit from a historical standpoint to where it is right now. And, it's funny you're mentioning this, because one of my friends that I usually talk to every week of my life who's very involved with wheat, corn, soybeans, soy meal. They feed a ton of turkeys and chickens and hogs in North Carolina. It's actually the guys who own Butterball Turkey. It's a place called Goldsboro Milling, actually. It's 20 miles from where I grew up. They do some serious grain buying, right? But they also do some trading on the side. And one of the guys, he's got an entire system. It's almost like you're going to, you go to the casino and you bet on red 22 on the roulette wheel. I mean, this is the kind of thing that this guy is licking his lips over, because he's buying the lottery tickets just in case it happens. Because if you play that game and wait for the ripe opportunities in option volatility, especially on some of these grains, and as you know, John, these things can move. When they start moving, they're astounding, and you can make some 10-fold, 20-fold, 30-fold on option plays. And I love how you're attacking this.
John, thanks so much for the input. Do appreciate it. I might be speaking in the next couple of weeks, see what the TAS profile saying on it then.
Great. And you know what? I'd love to have you. I'll put you in touch with some of the guys I know that are kind of in the thick of the guys who are on Butterball Turkey. And I'd love for you to talk to them, because they're, you guys can talk shop about this. They're very into it.
Excellent. Thanks so much, John. Have a good day.
Awesome. Yeah, you're welcome. So I was showing John's chart there on the long term on July on the wheat contract there. I tell you what we're going to do too is we're going to look at November beans just a second while we're kind of finishing up with the grains here. Just case in point, I wasn't a big fan of going long this product, but this is where it stops, or 913.5 down here. There wasn't any reason whatsoever to try to short this again, and we've stayed away from probably making a good 50 cents a bushel here on the long side trading this breakout. But again, this is kind of what the profiles do for me, which is block out one side of the marketplace, and that blocking out one side of the marketplace has been blocking out the short side. And if you're still listening, that's really what these things do for me, is they kind of, you're talking about going long wheat. You can't be short July wheat above 537.5. It just ain't supposed to happen that way. And that's why these profiles really help me. They just block one side of the marketplace out. And the scanner just gives you all those data points to really focus on, where it's kind of okay to be long, not okay to be short, or okay to be short, not okay to be long, or really do nothing phases. So thanks so much for calling in. If you're still listening, just mega added value constantly in the den. August gold having some breakdowns here as we speak, since we looked at this earlier, talked about 1170. We've actually hit 1168 and are kind of bouncing back above 1170. That's your target right now. But remember, I'm expecting this to get into the 1150s and even lower. So again, we're not buying these inflection points at 1170 right now. Gold showed its hand a little early, and we'll talk about that a little bit when we come back from break.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Larry Pesavento, a 40-year veteran trader. He uses pattern recognition, Gartley's, butterflies, ABCs, and Fibonacci in order to trade these markets. Trade what you see. Next on TFNN.
Hey guys, welcome back to the show. Got 5 minutes left. We're going to talk about the trade of the day here, in my opinion. 112.25 stops above the euro. We've gone back and retested. It looks like we're languishing down here. I feel like we could have much lower on this. The yen, again, get back in the 124 range. Use that POC, a little bit of leverage. I think we can see 124.61 bare minimum and much higher. U.S. dollar looking at 95.30 as the support area on this. Talked about that a couple of minutes ago. About 20 pips higher on that right now. Still loving that trade. U.S. futures, not really looking at that unless we get back down below 2103, 2104 on the September contract. Treasuries here. Again, need to see this back above 125.24, and that would be in kind of concert with the S&Ps get back below 2103. Let's take a look at Netflix. This is one in the news here. We got a lot to talk about today. Again, if you've been living in a cave, they're doing a stock split, 7-for-1. Stock's up about 2% or so, and this is why you don't short stocks like this. Things when their highs go higher, we're opening up right up here. Profile appearing above price action or below price action was very, very bullish. There's no way to tell these types of announcements. I understand that, but something was baked in the cake here, and you got to pay attention to the technicals and the profiles. Very similar to what John and I were talking about earlier. They block one side of the market out for me and hopefully for a lot of folks. Here's Facebook. Here's the weekly here, that 79.27. Look how beautiful that was. Close above, retest. Put your stops there. Put your stops there, in fact. Put your stops there, in fact. The name of the game is lose a little, lose a little, lose a little, make a lot. This is just case in point. Stock that doesn't have a lot seemingly to do with market relevance, kind of on its own tune there. Let's pull up something else I had on the radar screen. Again, Walmart now is announcing that they're going to charge each vendor to put stuff on their shelves. I guess is a new form of their business model. They're not going to be able to overcome the overhead that they've got themselves into. Stock's headed much lower. Love how this thing is. Stops again. It's the darling of my show. Stops above 74 and 75.20 based on your appetite for risk. BlackBerry, we're just going to take one small gander at this. Not Bed Bath & Beyond. If I can type in 3 Bs here. All right. Daily. What is this? I'm sorry. I'm sorry, guys. I've typed in the wrong. I'm sorry. I've totally made a mistake here. It is Bed Bath & Beyond. I apologize. Not BlackBerry. God. Anyway, I saw the BBBs and I started getting happy. 70.53 stops below there. Big time stops have to be below 69.13 on this. Again, you want to probably wait for the reaction to come out. In my mind, this is probably going to be a sell. Any openings on the after the announcement below 69.13 have to be sold on Bed Bath & Beyond. Guys, you've been great. Thanks, John, for calling in today. Stay tuned. Larry Pesavento is next.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.